Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1142nd edition, and that's a lot of editions of Short-Term Trading Live with Oscar Carboni, and that would be me. Good evening, traders. This video is being filmed on Sunday night for Trading Monday. That would be March 3rd, 2014. This is video 1142. Traders, we know futures trading can be extremely risky. Did you see the volatility on Friday? If you wanted to stay in a NASDAQ trade on Friday, you needed a 40-plus point stop in the NASDAQ. That's, 16 points in the S&P. Volatility is huge. You can lose all your money in this game, so know that this is very risky. Know that a stop can absolutely be your best friend in this industry. And if we go down, do not fall in love with the downside, and I will tell you why. Traders, in tonight's video, we've got a clap for green OMNI. Hello, green OMNI. Big volatility. Stops are massive, but the OMNI's green. On this board, well, for ES Dow trading, the gamut. On this board, it states, any good technical analyst knows that formations rule over all other forms of technical analysis. If you are a good analyst and you don't have too big of an ego and think that you're bigger than the analysis and smarter, then you know that no matter what you think, no matter what the street thinks, no matter what anything else shows, no matter what your indicators point out to you, formations rule. If you're in a formation, you close your eyes to everything else and you wait for it to pan out. Why would that be? You can have the best system in the world, but if you're the only one looking at that system, and even if it's kind of accurate, the whole world sees a formation. If you have a bull flag, everybody who's a decent technical analyst out there sees the bull flag. And I'll tell you what, there are more of us out there now banging away on our keyboards than there are big companies like Morgan and Merrill, and well, forget about that, Morgan and Goldman and everybody else, whoever's left. There are more of us looking at this flag going, that's a bull flag, than there are the big boys, right? That means that if there's enough analysts that understand that formations rule over other types of any form of technical analysis, then you must know that a flag is a flag is a flag, and if you're in a formation, it takes precedent over anything else you're looking at. So I always have known this. I am not smart enough to know better than the rest of the world. I don't know how to think through Bernanke's paperwork, and I certainly don't think I can match wits with Janet Yellen, but this much I do know, traders. I know how to read a chart. And when you see a flag on a chart, guess what? So does the whole world. And I know this. A flag is a flag is a flag. And I think what the series of flags we're about to look at are showing us, I think it's showing us that it's simply cyclical rotation taking place in the stock market. So they buy the stocks that are part of the NASDAQ, and let's say the Russell, and those go up for a while and take the leadership, and then all of a sudden those falter, and they come in, they buy the Dow and the trading stocks, and those go up, and then they falter, and they come and buy the S&P, and it seems to work its way up cyclically all the way through the bull market. That's what I think is going on here. Traders, I'd love to show you the charts with the flags and to show you that a flag is a flag is a flag, whether it's an Oscarism F flag or your traditional bull or bear flags. A flag is a flag is a flag, and we're going to see that right now. With no further ado, let's go look at some charts. Traders, here's my point. This is one of Oscarisms, if you will. It's called the F flag. It looks like an F, right? Pointed up a little bit, but it's called the F flag. The F flag is quite bullish when you're in a bull F flag, and it just goes on and on and on until it stops. So we call this an F flag, and we are not going to give it any other name like a broken F flag or a failed F flag unless it breaks or fails the F flag. We are right here, right now, currently, as I'm filming this movie on Sunday night, you are here, right at the bottom of the F flag. What else is very nice about this chart? If you recall, a few weeks ago, I was showing this to you and worrying that we would stay inside of here and end up going down and having a big problem. We have gotten above the top rung, the blue rung. We have created an F flag, which is bullish. The S&P looks great. I know this much. Any good technical analyst knows that a viable formation trumps all other types of analysis. This is a viable formation, and it trumps just about anything else you're going to read in the newspapers. And watch out for those wiggly little indicators that move a little bit too fast. Then you've got the NASDAQ. Even though we opened up Sunday night and dipped, this Sunday night as I'm doing this video, we only dipped right to the bottom of the F flag, came right back up and are trading here right now in your NASDAQ. Still inside of the F flag and looking good. Then there's the Dow Jones Industrial Average, if you remember this chart. I was worried about this. Remember I said it's looking a little better, but I'm still worried. Well, now it looks much, much better. Comfortably inside the big F flag. Here's the F flag and here's the pole. Comfortably inside the F flag. Well above the top rung here of the tool I was using to possibly think we were rounding out. So this is looking good. So I just showed you the NASDAQ and the S&P that ran ahead. And now you're seeing a good catch up with the Dow Jones. It's starting to catch up. And if you look at the DAX traders, what would you call that? That's got to be called a bull flag. Now, is it just a bull flag? Well, it's a nice looking bull flag. It's got some time in it. But look at how long this parallel channel has worked. And look at what's holding along the bottom of this flag. And it seems to be bouncing right off the blue line and the flag that the DAX looks bullish. Then, of course, traders, this chart that I showed you, the Dow Jones Transportation Average, earlier in a few videos ago, earlier last week, I said this is a possibility. I don't think it will happen, but it is absolutely a possibility that could happen. A viable possibility if the broad market doesn't catch up. Well, the broad market is catching up, and this viable possibility is becoming slightly less. Okay, so I drew all these red lines in before there was any green lines past here, right? So this was the last bar we had. I drew in a bunch of red lines and said, if this fills in, we've got a problem. And kind of, it's kind of looking like the red lines I put in, right? But we did get above on one day, came back down, and now we're here as a Friday settlement. That is looking better. Not nearly as impressive as the futures market. This chart still worries me a little, but that looks much better up here than it did when it was down here. Then there's this, traders. Don't forget the last video I did for you was an epic find on the monthly chart. I don't have enough room in this video on this page to go back and show you, but if you recall many, many examples in a row, if they were large monthly outside reversals, it led to a big run-up throughout the rest of that year. You might have had a little bit of herky-jerky around, but it eventually went higher, here, here. Every example that we have, and if it was bearish, it worked on the downside, here. So they worked really well. The big outside reversal bars on the monthly chart showed us, after doing 20 years worth of research, that we should go higher in the S&P long term, and that picture, I think, has not changed even slightly. Pull your own charts, do your own homework, and join me at livewithoscar.com. So, traders, you've seen the charts, my technical argument for 1, the bullish OMNI, 2, for why we still have to go higher this year no matter what happens, and 3, why a flag is a flag is a flag, and my F flag is going to take us home. Traders, pull your own charts, do your own homework. I'll see you at livewithoscar.com in my free chat room where I am live on camera and microphone, and I offer you trading recommendations throughout the day and night. From the moment we think of the trade until we're finally done executing, I give you flash updates. Come on down to livewithoscar.com and work with me. All right, traders, I'll see you soon. Remember, keep your emotions out of trading. One of the best things you can do, if possible, with keeping your emotions at bay, is to say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll video at 11:42, and do not fall in love with the downside. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.